Hi everyone, welcome. We're just waiting for people to connect. We just let everyone in. So just give us a minute just to give everyone a chance to get their audio connected. Thanks a lot. Great, I think everyone's connected. So yeah, big welcome from me, Sean Godaway. I'm a co-founder at SA Proptech. And yeah, it's my pleasure to welcome you here. And I'd like to thank all of you for taking the time. The session is being recorded, so we'll share a link shortly after, well, in the next few days after we've completed our webinar. So yeah, really exciting topic, something I've been really interested in personally. And it's great to see some activity that's just kind of gaining momentum in South Africa in terms of crowdfunding and tokenization in the property industry. Lots of potential, lots of opportunity, and for me it's exciting that it can unlock access to many people who didn't have access to property investments, and also funding, new types of funding for developers and perhaps homeowners, which ultimately will unlock a lot of value and hopefully bring on growth, more jobs, more entrepreneurs in the space. So yeah, just myself. So quick intro, I'm co-founder of the Proptech Association, as I mentioned. My day job is Managing Director of Diversity Property Solutions. We're a multifaceted property advisory operating in Sub-Saharan Africa. So we do various things around strategy and market analysis, research, also training and innovation, digital consulting and change management for property stakeholders. And I'm also co-founder of PropDD, which is an online due diligence toolkit for residential property. So I'm also a PropTech founder myself in my own humble way. So I'd like to just welcome our panelists and ask each of you to briefly introduce yourselves, tell us a little bit about your background and your current role and organization. So perhaps we could start with Nigel.
Right, hi there guys. Nigel Adriaanse is the name. I am founder and CEO of the Enterprise Development Property Fund, as well as the EDPF Property Academy. And briefly, just those organizations are specifically focused on educating Black entrepreneurs who want to get involved in the property sector. We are a transformational body, and we have quite a number of partners who assist us in terms of the education that we do. In terms of the academy, that is specifically focused on educating entrepreneurs. So it's not just anybody who wants to buy a property. It's specifically geared towards, like I said, entrepreneurs. And our role in the space that of PropTech that we are talking about tonight, there are three areas that we focus on. Number one is us building a crowdfunding platform, which in fact is already done. And we help entrepreneurs who want to build a property portfolio through our own crowdfunding platform. We have built our own cryptocurrency, EPCN, which again is to help raise capital for entrepreneurs. And then we also have a stokvel for the same purpose. So three different areas that we have built, or three different items that, or systems that we have built, to assist the entrepreneurs that are in our program in order to help them to raise capital. And I think that's about the briefest I can be.
Excellent. Thank you, Nigel. You're doing some great work for entrepreneurship in the space. So we're excited to learn more, and also how you harnessing crowdfunding and tokenization. So thank you for that. Next, Tumeleng, if you could give us a brief introduction.
Hi, good day, guys. My name is Itumeleng Patanyana. I'm the founder and CEO of Gazata.com. It's a new fintech company. So we are a peer-to-peer or otherwise known as person-to-person online lending platform. So basically what we do, we connect individuals who need credit with individuals or companies that are willing to lend out their excess funds as an investment in personal loans. So it's sort of like a crowd lending. How the idea came about is you look at the emerging market space, let's say the township space. You look at the stokvels that exist. Currently, they are lending to each other, but there is no formal contracts being signed. There is no affordability assessments being done or credit checks that have been done. So our platform will allow such groups or any individual to go onto the platform, and then we would do the verifications on the borrower. That means the assessments, the credit checks, and all of that. And then we would then assist the lender also to collect the funds via debit check technology on a monthly basis. So alternatively, we allow the emerging market or the marginalized communities access to lower cost of credit. And we also allow any individual to be a lender on Gazata.com. Thank you.
Excellent. Thank you, Ntsumileng. Great to see newcomers in the space. And really powerful what a platform like yours could do to empower small business owners, people perhaps wanting to buy property and many, many other things. So really exciting. Thank you for that. Next, Rupert, if you could give us a brief intro.
Thanks, Sean. And thanks for inviting me onto the panel. It was a real excitement for me to be invited into an environment like this of like-minded individuals. Sometimes I think we will sit around trying to create these new businesses, and it's quite lucky to connect with this network. So delighted to be here. I've been in the property industry about 16 or 17 years, give or take. I think like most people in the property game, you kind of trip into it. I've been involved, I run Easy Properties. It's a business that we launched about 18 months ago. So yeah, we like to think of it as a COVID business. We are a subsidiary of Easy Equities and the Purple Group, which is a listed company on the JSE. Again, yeah, we started about 18 months ago. Essentially what we do is we fractionalize property ownership and democratize property investment in doing so. And we, yeah, our platform enables us to deal with all sorts of friction points, which have traditionally been barriers to entry and barriers to investing in the general property market. And through a combination of our platforms and auction capabilities and various things, you know, we've addressed a lot of those friction points. A bit of background on the company. We've got about, we're approaching 200,000 people that have registered with us over the last 18 months. We're signing up about 1,000 people a day. We've invested into 14 different property opportunities so far. Around about 175 units and around about 200 million rand. And yeah, you know, like everything, startup businesses have got their challenges, which, you know, maybe we'll talk about it a little bit later, but yeah, that's me.
Great. Sorry. Thank you, Rupert, for that introduction. Yeah, great to obviously see, I guess, you guys on a larger scale coming from really successful business. So really great to see you gaining traction, and yeah, interested to hear your insights. Next, we got Zach, if you could give us a brief intro.
Hi, Sean, how are you doing? Thanks for having me again. Really appreciate it. As Rupert said, nice to be here with like-minded individuals. So my name is Zach. I'm the founder and CEO of CrowdProp, which is a real estate equity-only crowdfunding platform based in South Africa. We connect property investors to property owners and development for the purpose of raising capital for lucrative property investments. In short, very similar to what Easy Properties do in that sense. However, we adopt an equity-only approach, number one. Number two, we also cater for offshore property investments, as well as development opportunities from an investment perspective. Our aim is essentially to provide investors with a platform that makes investing in property simple and affordable, by breaking down those barriers to entry and opening up property as an asset class to more investors. As you know, property is something that has always been dominated by high net worth individuals and institutions as well. And coming from the asset management space, it has always been a request from clients to have more tangible assets to invest in. And that's basically where we decided to put our focus on.
Excellent. Thanks, Zach. Just apologies for any background noise. I'm just traveling, so I've tried to find a quiet spot. But yeah, thank you all for your introduction. I think we've got a great spread and of expertise and different businesses operating in different ways at different scales. So I think it's really cool. So just to start off, just in terms of housekeeping, we're going to try keep it to an hour or just over. So just forgive me if I step in if you to move on to the next person when you're speaking, but I'll try be fair, obviously. So just briefly, maybe to set the scene, it'd be good to get your insights and your take on what exactly crowdfunding is and what tokenization is. So either one of those or both, depending on your expertise and background. So Nigel, if you'd like to start us off, please.
Yeah, sure, no problem. So the thing that we need to understand about, firstly, tokenization, there's a very big difference between tokenization itself and the token that you create through tokenization. And people often sort of get mixed up between the two. But let's start with crowdfunding. Crowdfunding basically is a way to raise money from a large group of people. That's basically what it is. You can either do that manually by connecting with a whole lot of your investors and getting them all to invest into an opportunity. So if you have a property that you want to buy, then you get a bunch of investors together and you can either, like I said, raise that manually or through a crowdfunding platform like a number of us have created. So we as EDF have created our own crowdfunding platform, and basically we've brought a whole bunch of investors together to give them the opportunity to invest into property opportunities. Our students bring the opportunities. They put their opportunity on the platform, and our investors will then decide whether they want to invest in that opportunity or not. And that's basically what crowdfunding is all about, for a group of people to invest into one opportunity. The difference between that and creating a token, so we, as an example, have created our own token, the EPCN token. That token basically is a cryptocurrency, and we've created the cryptocurrency so that, again, people can invest into property opportunities. Now, cryptocurrencies, you've got a whole host of cryptocurrencies. There are thousands of cryptocurrencies out there, things like Bitcoin, Ethereum, and Dogecoin, and a whole range of others. But ultimately, tokenization, or to create a token, you can raise money to do basically anything. Property investment is one of them. And we've used, as an example, our token EPCN to create an opportunity for people to invest in property, just like crowdfunding. So there are similarities, but there are also vastly different opportunities that you can use your token for. As an example, for Bitcoin, basically Bitcoin has no back-end asset value other than the perceived value when you buy it. Whereas if you buy a property token, it has an actual value, and the value is dependent on the value of the asset, which is the property. There are other tokens that are have value like the dollar. So there's USDN, which basically, USDC, which is a token that you can invest in that relates directly to the value of the dollar. So there are tons and tons and tons of different tokens that you can invest in the world. Like I said, thousands of them. But if you invest in a token that specifically relates to property, like our EPCN, then you then become a fractional owner in that property. And by fractional owner, I mean you then become a small owner, or you have a small share in the asset, which is the property. So from a crowdfunding perspective, you become one of those investors in a platform, or manually you can become investor through shares in a company, whereas on a tokenized perspective, you actually become a shareholder in that property through a token that has been registered through the platform that has been built by that particular company. So it is kind of complicated if you compare the two, but they are very similar in the fact that you're investing as a part of a group of people into a property, either an individual property or a group of properties or a property investment portfolio. So that's sort of, from my perspective, what the similarities and differences are.
Thanks, Nigel. Very, very helpful. Thanks for those points and descriptions. Tumeleng, I just wanted to ask if you would like to add anything additionally to what Nigel just explained.
Yes, Gazata.com is similar to what Nigel and the guys are doing, but instead of investing in property, on Gazata.com, you invest in personal loans. So our model is to assist marginalized communities to get funding in order for them to buy property, for instance, as a primary residence. So the back end is all similar. So it's a crowd or a number of people that come together, they put in money and then they lend it on to one borrower, and then that borrower can then perhaps purchase a house for themselves. Excellent, thank you. Obviously, access to funding is a big thing for a variety of things. Obviously, your platform enables people to raise money for different things, but property is quite empowering and adds to wealth creation, which is great. Rupert, if you want to add anything to the comments.
Yeah, I think you were apologizing for the noise where you are. We are sitting in an unholy storm in Johannesburg. So if it sounds like Armageddon, it's because it kind of is at the moment. Yeah, I mean, obviously one of the benefits of crowdfunding, I mean, it's as simple as raising a lot of money from a lot of different people and generally really small amounts. I think Zach mentioned it earlier. It's one of the tenets on which we base the kind of easy properties principles, and that's providing access to property investments that the ordinary kind of man in the street generally wouldn't have access to. I think very often the very best property investment opportunities are available to those who are already well-heeled. And generally, the ordinary man in the streets pays kind of retail prices for property opportunities. I think the crowdfunding nature allows you to do a couple of things. A, obviously raise a lot of money, and B, because the power of your purchasing power, the power of your crowdfunded check is infinitely better than something that you could do on your own. And therefore, you are obviously able to negotiate far better deals, which again is obviously just a great starting point for the returns on these investors. So that's a particular one. I mean, an interesting example of that is in our latest raise, which we've just completed, which was down in Sea Point on the Atlantic seaboard. We bought a whole lot of units from the developers called Block. It's called 4 on O. Obviously, as we all know, being in the property game, the Atlantic seaboard is some of the most prestigious real estate in the country. We bought 5 units there, and we have got over 12,500 people that have got a fractional share in those units, which points to the democratization that one is able to do through, again, fractionalization. And one of the stats that I really love is our average investment size is 1,600 Rand, and that's across our entire portfolio. So again, it's providing access to these opportunities. You know, if you've got 1,600 Rand, there's absolutely no way that you could ordinarily invest in any kind of property, least of which is good quality investment opportunity. So I suppose it just talks to the power of crowdfunded opportunities and the democratization through the kind of fractional ownership thing. So that's all I'd really add at the moment.
Excellent. Thanks, Rupert, and for those examples, obviously exciting the access you're providing people to some really interesting projects. Yeah, I know Zach, the CrowdProp, also is involved in some great properties and projects. But yeah, I just wanted to ask, following on from everyone, if you have any of your own comments on what you feel, you know, crowdfunding or tokenization is and the role it plays.
Sure, of course. Thanks, Sean. So just to take a step back, coming from the asset management space, I think we've seen a big shift in terms of back in the day, or the older generation used to entrust their wealth with certain asset managers like your Sanlams, your Alan Gray, whatever it may be. And what's been happening, especially with the younger generation, is people want to be in more control of their wealth. And I think that's where crowdfunding comes into play, because where you have these previous traditional investments that are kind of managed by a small group of institutions, crowdfunding now offers you the ability to tap into markets that were not previously accessible before, regardless of the barriers to entry, just in terms of getting that access by leveraging technology to be able to offer these to clients. And that can take many forms, right? So you have property crowdfunding with the Tumelang. He's essentially playing in the loan space, and that's an industry that's been getting a lot of traction lately. I mean, essentially, it's DeFi, right? Decentralized finance, right? So I think I want to be careful of tapping into the cryptocurrency realm here, because I mean, it's a whole industry on its own. It's a complete different world. And there's so many different aspects. I mean, Bitcoin and the majors are just one small aspect of what is happening. The advent of DeFi, the introduction of non-fungible tokens, I mean, it's changing a lot of what we do. And, you know, a lot of people are anxious when it comes to these type of things, and deservedly so, because there are a lot of scams out there in the market, which we read about on a weekly basis, actually. But I think people really need to understand, and that's where these kind of panel discussions come in, Sean, is where we try to break things down and explain things to people where they might be hearing these buzzwords like crowdfunding and tokenization and cryptocurrency or whatever it may be, but what does it actually mean, and how does that impact you in terms of your daily life? So tokenization, in actual fact, is just a digital representation of ownership. That ownership can be whatever it may be. It can apply to different applications. You know, it can be, loan financing. It can be property ownership. It can even be trade finance transactions. It can be so many different things. But essentially, in a world that's moving towards a more digital approach, as we've seen over the last 20 years, what tokenization offers is a form of ownership that is essentially undisputable. Being on the blockchain, it's immutable. And what it also does from a liquidity perspective is that it makes these assets more efficient in terms of being traded. And I see tokenization of a lot of things happening over the next couple of years. I mean, it could be ownership of your car, to where your car was serviced, what parts have been changed, where did those parts come from? And, you know, that's just a small example, but there's so much opportunity in the space, and I see it as an area of huge growth, regardless of what the application may be.
Thanks, Aki. I totally agree with your comments. You know, conversations and general discussions like this are really important. I think someone else mentioned, you know, we tend to operate in silos. So yeah, and it's great to educate, because there's so many buzzwords. I think that you know, people hear and maybe they think, you know, I don't understand, or it's, you know, it's not for me, or something like that. It's not accessible. But it's important just to break it down that most of this is, you know, fairly straightforward, and the magic is that it's available to the man on the street. So thank you very much for that. Just moving on to our next question. I think it's quite important and speaks to, I think, the journeys that you've all had, you know, personally and in terms of your organizations. I just wanted to ask, what are the main barriers to adoption? So that's from I guess, your consumers, as well as industry and, you know, partners, regulators, banks, perhaps, the people you need to sort of make this happen, and then also implementation. So linked to, you know, in terms of actually rolling this out, you know, what were the kind of barriers that you came up to? And, you know, how did you overcome these, or are there some that you're still working through? So I think to start us off, Nigel, if I could hand over to you.
Sure. I think there's so many barriers to entry in this space, and I think the most important one, or the biggest one, is understanding and knowledge of the industry itself. Zach has mentioned quite a number of things in terms of what the space offers. And as investors, people need to be extremely careful, because if you can easily burn your fingers in this industry. So education is the most important. Understanding what you're getting yourself into, understanding the people you are dealing with, so that you make sure that the people you are dealing with are not scammers, like Zach has just mentioned. So that, I think, is the most important. And for us as developers of the particular the technology that we are part of developing, the first barrier to entry is the cost of developing, and being able to do the things that we do costs a lot of money. So that's the first barrier to entry, just from a development perspective, but then also from a perspective of the investors, understanding what goes into the technology. So when they invest into a crowdfunding platform, for example, in terms of buying into a particular project, that they need to understand that there are huge costs related to developing that particular technology. And then also the fact that, let's say, for example, if you want to invest in a what do you call it, a stokvel. So the stokvel is probably the cheapest one to be part of, but even in a stokvel, it's extremely expensive. So if I, for example, have developed the EDBS stokvel, we've spent a lot of money in terms of developing that stokvel. And for people to come on board and to then say, okay, I want to be part of the stokvel, or this crowdfunding platform, or this EPCN, our cryptocurrency, that they need to understand that we need to obviously be able to recover those costs. And in order for us to recover those costs as an organization that's put this whole thing together, we need to have a stake in that business. And in order for us to do that, people need to be educated to know why we as an organization need to have a stake in that business. So there are all these things that we need to educate the public about. And that is, for me, the most critical part is the education side. And that, from an adoption perspective, is the biggest thing that we need to let the public know about and to educate the public about. Then I think the other barrier to entry, so beside the cost of it, is to be able to manage the process of purchasing those properties. Because we're talking Proptech, I'm going to talk specifically about property and property investment. So it is critical that people understand all of the processes that go in. So things like the due diligence, your feasibility studies, doing the right, when you do your feasibility study, understanding returns on investment, understanding your internal rates of return. People again need to be educated in terms of what do those things mean. And when you want to invest into this opportunity, you yourself as an investor need to understand all of those things. So for me, the biggest thing is education.
Thank you, Nigel. Such a key element of anything new and perhaps disruptive in an industry is that education. So I wholeheartedly agree, and I'm sure everyone here, you need to put a fair amount of effort into marketing and also engaging with, your audience, with industry. I've seen it myself through my various activities in Proptech. And it is really important, but it can also be quite fun, and it's great to kind of perhaps shed some light on topics and concepts that could really be beneficial to people. There's options that they don't know they have. So I think it's really exciting. Rupert, I'm going to hand over to you for your comments. I just need to secure my power supply, so I'm going to step away for 2 minutes. But Rupert, please go ahead.
Cool. Yeah, I jotted down a couple of things here off the top of my head, and I think Nigel, I think your answer was very comprehensive and correct. I think the biggest barrier initially we faced was the regulatory environment. I was just jotting down some of the regulatory bodies that we have to comply with, and I've probably left one or two off, but we've obviously got to be compliant with the FASE Act, the Property Practitioners Act, we're going to be registered with the EAAB. We've obviously got to get our prospectuses approved through the CIPC. There's compliance with the public property syndication schemes, all of that stuff. I mean, the legal expenses to make sure that we were compliant with all of these, and obviously the Companies Act, with all of these different aspects was, it's a massive barrier. I mean, we wouldn't have been able to launch without the backing of our listed parent company. There's no doubt. So there's an enormous amount of regulation around. The second, obviously, the obvious biggest one is the cost of development. You can have the best idea in the world, and you've got to get someone to be able to translate that into the kind of code that works and obviously is user friendly, and there's a enormous cost in that too. Those are big ones. I think one of the interesting ones is it was something I learned at Lead Home. I did some consulting at Lead Home a couple of years ago, and is around design thinking. We always, well, not we, I always get into the habit of, you're trying to provide solutions to things you think your customers want. We all think we know our customers, and there's an inordinate amount of time and effort that goes onto building for solutions that you think these guys want. We're quite lucky in that we've got an enormously engaged community, and so we are able to send out questionnaires and various things to them, and we get a large response, and that largely has assisted with that. But I suppose that's also a barrier. You've got to just keep in mind this kind of design thinking and checking in and iterations of what you think you are building. Often where you start off and what you end up kind of producing are quite far apart towards the point of delivery. And the other major friction, I think, is around that minimum viable product. You know, everyone wants to launch something that looks beautiful and it's got all the bells and whistles. There's obviously a cost associated with the kind of delay in launching a business. That is all refined. You know, there's a saying that I saw a while ago, something about grind now and shine later. And that's a big one. You know, you need to be able to get your minimum viable product out into your community and design the products around the kind of feedback that they are giving you. I suppose it goes to that design thinking again. And there's just a trade-off and a friction between producing something that looks absolutely amazing and that people don't necessarily want, or, you know, something that operates in a kind of minimalistic way and it does what it does, but you kind of co-create your end product. So I suppose there are quite a few different friction points in that.
Excellent, thanks, Rupert. You mentioned the holy grail of the MVP for anyone launching a startup. So in my experience of launching something recently, that's where it is, and trying to decide, we'll try to figure out what the MVP is and when is the time to launch. And I remember Wayne telling me, you know, the best thing you can do when you're building something is launch, and, you know, you fix as you go along and you get that invaluable feedback. So it was a great piece of advice. And yeah, it's a, you know, any sort of tech startup, that's just really important, you know, because a lot of guys perhaps don't get there. You know, and kind of launch fast, fail fast. You've got the process is not the same for everyone, and it's quite difficult sometimes, but it's also amazing. It's quite a rush to sort of start something and get a good reaction from the market. So thanks for those. I'm going to move on. We've got some good questions that I'd like to just pose. So from Sarah Golding, quite an interesting one. What do you think the expected long-term impact is on the residential market? So obviously with, you know, increased liquidity, you know, increased access to investments, funding options for developers. Zach, I was going to put that to you. What do you see as a long-term impact? It's a very good question.
Thanks, Sean. So I think with regards to the residential market, I think although it seems like there's a lot of developments and stuff happening around us and there might be some excess supply, if you compare that to what's happening overseas and with regards to certain trends like urbanization and what have you, I think that there's always going to be a need for more residential property. How I see the industry playing out is that I think given the global narrative in terms of what's happening with regards to inflation creeping up, what's happening with regards to equity markets becoming overheated per se, I think that there's going to be a time when tangible assets such as property start outshining the rest. And in my opinion, I see residential property doing quite well, barring any political uncertainty. But we'll have to wait and see. However, I do believe property is going to outperform a lot of other asset classes over the next 10 to 20 years. And there's always going to be a need for housing, for people to need places to live. And specifically, I think location is key. Getting the right properties in the right locations, especially with regards to residential. I think if you focus on trying to find properties in upcoming areas that are soon to grow, I think you'll see a lot of capital upside with that regard.
Excellent. Thank you, Zach. Great answer. And yeah, a lot of interesting impacts that we can see already, and some that are going to come along, but I'd say mostly positive, which is great. Itumeleng, we've got a question for you. So in terms of your investor profile, what is that typically? Is this impact investment? And what is the expected risk return in terms of your business model and for those who take part?
Okay, on our platform, anyone can become an investor, whether an individual or a company. However, in terms of the National Credit Act, that individual will have to register with the NCR, which we can assist internally to get all the guys registered. And in terms of interest returns, our platform is set for a lender to charge the borrower an interest of a minimum of 10.5% per annum, up to a maximum of 22.5% per annum. Why we did that is for us to offer loans that are fairly cheaper than going through a bank, and most importantly, way fairly cheaper than going into micro lenders or unregistered micro lenders, the loan sharks. So it's a win-win situation for both lender and borrower. As you all know, if you perhaps put your money in a money market account within the bank, you'll be lucky to get 6% per annum interest on it. So it's a win-win situation. And in terms of risk, obviously there is default risk if the borrower does not repay his loan. But we've got a very solid risk management policy. When we onboard borrowers, we don't just onboard anyone that comes along. So we've got strict verification processes that we do. Once we see that a borrower is capable of repaying the loan, we then list them onto our website. So you as a lender, you can then scroll down and choose which borrower you want to lend your money to.
Excellent. Thanks, Itumeleng. Great to hear the kind of mechanics of how you're operating, and also importantly who those people are you're engaging with, which is really exciting in terms of you targeting and the access you're providing. So thanks very much for that. Next, Nigel, I'll put this question from Curtly to you. How does the return work for the fractional investment made in terms of crowdfunding or the token? We may have covered this, but it's quite an important question.
Yeah, so unfortunately, there is no real answer to that question, because when you have a property opportunity on a crowdfunding platform or in an EPC, in our EPCN, for example, or even a stokvel, every deal is different in property. When one of our property opportunities come about, it is based on a specific investment strategy. So let's say, for example, one of our students has an opportunity where 66 units has been built. The total cost was 36 million rand, and the return on investment on that particular deal was 9.75%, I think, because of the particular opportunity that it was. Then I've got another project which I'm currently working on, which is 23 million rand. And that particular opportunity has a return of 11.35%. So every deal in property is different. Every deal has its own return on investment. And as an investor, you have to look at that opportunity individually to say, is this the kind of opportunity I want to invest in? Is it sort of in line with the kind of return that I want as an investor? And then if it is, you then invest. I think the beauty of a crowdfunding platform, like the one that we've built, is that you yourself, and I think Zach said it earlier, you've actually got control of your own investment opportunities. So when you go into the platform, you look at the opportunities, You decide what your return which return you want, and then you decide which of those opportunities you want to invest in. So number one, the returns are dependent on the investment opportunity itself, the property you're investing in, and it's up to you whether you want to invest and what return you want back in terms of the money that you're putting in. Just like Itumeleng just mentioned now, even on their platform, even though it's not property related, they will match the investor with the lender anywhere between 10.5% to 20 or whatever percent it is. So that ultimately, unfortunately, like I said in the beginning, there is no sort of fixed answer to the question. You must decide as an investor what return you want, and then look at the platforms to see whether those investment opportunities match with your investor, the money that you want to put in, and your return that you want to have from that investment opportunity.
Excellent, thank you, Nigel. Yeah, it's you know, the important thing to remember is, you know, you're dealing with bricks and mortar, physical asset, and each property is very unique, even within the same development. So it's a really important thing, and people who are new to property need to understand those differences compared to when you're dealing with you know, intangible financial instruments. So that's really, really important. Thanks, Nigel. That was really useful. Rupert, there's some question directed at you, or a sort of package of questions. So can you give some insights of how you do the ownership split? Is the asset legally owned by a company like an SPV? And are people owning shares of the company, or is it directly ownership of the asset? So I think we've covered some of these, but maybe just good to summarize that.
Yeah, sure. We set up an SPV. It's one of the ways in which we raise capital is through the issuance of shares. So we will go out and curate a property opportunity, do the due diligence, do the negotiation, all of that stuff. We then go and sign an offer to purchase with the suspensive condition, of raising that capital, and then we issue shares through an IPO process. We issue the shares at R1 a share, so it's really easy. Obviously, there's the fractionalization in place that you can buy R1 worth of any of these property opportunities, and each SPV owns a set of properties within a single development. So there's 25 units that are housed in that SPV. People get an opportunity to, again, buy into that SPV, but they also get an opportunity to diversify by buying across the various SPVs around. So yes, they are bought in the name of an SPV, and the investors are shareholders in each of those companies. Yeah, at the end of the investment period, as shareholders, we go back to the shareholders. Obviously, thankfully, we still got about 4 years to go before we reach one of the end of our investment periods. But we generally hold these properties for between 5 and 7 years. And then each one of the investors at the end of the investment period will get an opportunity to vote on an exit. And yeah, we either exit out into the open markets, or potentially back into a new group of investors, or some institutional buyers, or whatever the case may be. And then I saw there was some question around returns and yields and stuff. We pay each investor's share of the rental income through a dividend. So there's obviously dividends withholding tax that gets applied, but we pay out a dividend each quarter to each one of these investors. And then obviously at the end of the period, when we liquidate the asset, then there's the last final dividend and the return on capital. I think one of the things which wasn't part of the question, but while we're chatting around how the process works, is, as we know, one of the biggest issues around investing in property is liquidity. And again, around education and things like that. We try and encourage our investors not to invest with money that they're going to need for whatever, rent or school fees or something. Again, it's an education thing where we've got to just keep reminding all the guys who want to invest in residential or commercial property that this is a medium-term to long-term investment. Don't go and buy shares in a company and try and flip them 4 months later and get your returns. But having said that, life happens and people need access to capital. In traditional property ownership, as it can be quite expensive, and it can certainly take a hell of a long time to get liquidity. So we've built an auction capability, which is based on the intraday JSE auctions. When a share gets a certain kind of volatility, or right at the end of the day, it goes into an auction, and there are auction prices that get set based on, based through an algorithm on where the most amount of shares will trade at a particular price. And once a quarter, we enable our guys who are owners of these shares to put them onto the market for sale if they do need liquidity. And then also it provides an opportunity for people who've come later onto the platform, an opportunity to buy into some of the property investments that they might have missed in the beginning. But that's essentially how we do it, through shares in an SPV.
Excellent, thank you, Ruben. I think a lot of people have questions around those technicalities. So that's, I think, summed it up nicely. We're already coming to the end of the session. It feels like it's flown by. Just so everyone knows, any questions, you can reach out to me and I can put those on to the panelists, and I'm sure they'll be willing to also engage with you on LinkedIn. So just so you know if there's any burning questions or questions that come to you after the fact, we can obviously try address those. And I said session is being recorded, so that link will be shared with anyone who registered for the webinar. So just to close off, I thought it'd be interesting just to ask you each, in terms of your personal journey into the venture you're currently in, what kind of lessons have you learned, and is there any sort of brief, brief points of advice that you could offer people that are kind of considering jumping into something like this? So I think, Tumeleng, if you could start us off, please.
Yes, there's a lot of lessons that we are still learning as we go on, because we are a startup company ourselves in South Africa. One of the hurdles that we needed to cross is how do we move the money from a lender to a borrower without it touching our bank account, because we don't want to handle third-party funds. And the technology that's available in South Africa, most of it doesn't allow us to do that, because we wanted to use a e-wallet functionality. So most of the service providers are either UK-based or US-based, and they can't cover the South African market. But luckily, we managed to pull some strings and got that right. Anyone that wants to jump into the crowdfunding platform, I would say maybe study an existing crowdfunding platform, try and get what kind of technology they are using, and just shop around with the different technologies that are out there, and definitely be aware of any scammers, because there's a lot of guys out in the market that will promise you white label platform that you can use instantly, but it never works. So I would say be very careful and do your research thoroughly.
Excellent, thanks, Tumeleng. Always important to prepare and research, definitely. Zach, if we could move to you in terms of your journey, got any insights for us?
Sure, thanks, Sean. Biggest takeaways I would say is when I started thinking about the concept of the business model that I wanted to introduce, it was the fact that crowdfunding was essentially, or equity crowdfunding was essentially a unregulated area in South Africa. It became a real challenge figuring out how to kind of roll this out in a manner that is compliant with current legislation. And as Rupert had mentioned earlier, the legal fees, the process is really, really difficult. But looking back, it goes quite fast. What I will say is that no idea is too big. If you do have something that you would like to roll out, whatever that application may be, having the idea is really just the start. Executing on that, being able to do so in a manner that allows you to scale. And nowadays with technology, I think it's very important to keep in contact with those like-minded individuals in those industries, just to kind of stay ahead of what's been happening. And there's a lot of resources out there. There's a lot of help that you can get through the internet, and people really need to leverage that. The bottom line, I think, Sean, is that entrepreneurship is never an easy journey. If you want easy, you need to be a salary earner, because the grind really doesn't stop. And every day there is a new challenge that you face. So from my side, I would just sum it all up to resilience. I think resilience is what's going to help you follow through on your idea. And believe me, it will take much longer than you anticipated to.
Thanks, Zach. Great insights and suggestions there. Really appreciate. It's quite invaluable for people to hear sort of frank insights like this. So thanks very much. Nigel, obviously been involved with a lot of entrepreneurs, and then you can, I guess, you have insights from them, but yourself, what I know the journey has been a long one for you, and you've been doing a lot of amazing work. Are there some key sort of takeaways or advice you'd give someone sort of jumping into entrepreneurship, and probably specifically on like the startup side?
I think my most important one is don't do it. As entrepreneurs, you have to have a certain sort of backbone to becoming an entrepreneur and really taking the journey to its end. I've been involved in 5 different entrepreneurial sort of journeys, ventures, whatever you want to call it. And after maybe a year or 2 or 3, having to pack up and go back to work again because I just couldn't make the money enough to keep living. Entrepreneurship is one of the most difficult things you'll ever do in your life. And if you don't have a backbone for it, don't do it. You're going to need your support from your family. That is the most important. If you're married, your spouse, your children, they're going to have to support you enormously. You're going to have enough money to keep you going for at least 3 to 5 years. From an analysis perspective, if you look at small businesses, most small businesses, up to 95% of small businesses, fail within the first 1 to 3 years. For me to say these things is not easy, because I love being an entrepreneur. I love being out there doing my thing. I love being out there encouraging other entrepreneurs. It's not easy for me to say these things, but it's the reality of the day. If you do not have the backbone and you don't have the money to keep going, then rather stay in your job. And even more so in these areas that we are currently focused on things like crowdfunding, things like cryptocurrency. These are new areas in the world. So if you are not prepared for it, if you don't understand it, if you are not connected to the right people, if you are not following the regulations that are out there, and understanding that, in fact, like Zach said, some of the regulations aren't even developed yet. So you hear horror stories from what the Receivable Revenue is doing, what the Reserve Bank is doing in these areas where they are rapidly moving into creating regulation. You need to understand all these things before you even think about it. So if you want to go into this area of business, then first of all, understand what it is you are getting yourself into, educate yourself, connect yourself with other people that are in the space. But most importantly, make sure that in any business you start, that you have enough money in the bank to actually keep you going for at least about 3 to 5 years. We are now 5 years in. We are busy scaling our business, but I brought people into the business to make sure that we had enough money. And because of being involved in entrepreneurship and business for so long and so many times, I now understand what it takes to actually run a business and to get to this point. So for me, I don't want to scare anybody, but it is a scary thing to actually be an entrepreneur and to start your own business. The other way is to get, like Rupert has spoken about, where you actually have a big brother, an organization that has money that can support you while you're trying to build a business. That's the other way to build an entrepreneurial sort of mindset in business and so on, that you actually have somebody that supports you and that you know that you're going to have money to be able to carry on and build this business of yours. So yeah, it is a scary thing. And that's, I think, the only thing that I can say. Make sure that you have the backbone, make sure that your family is supporting you, and make sure that now, number 3, you have the money.
Yeah, Nigel, thank you very much for those honest and practical insights. I think a lot of entrepreneurs will identify with that, and you know, you've got to be brutally honest. It's not all sunshine and rainbows, but it can be massively rewarding, and you can do a lot of good, you know, especially in a country like ours. I think you can create opportunities, which I think is, you know, the best thing you can do, and it can be fulfilling, and it's, you know, we kind of lift as you rise, I guess. So that's awesome. Thank you so much. Rupert, for you, just to round us off on the question side of things. I know you come from a corporate background, but obviously I think your perspective would be very interesting, you know, from moving from that to something quite different.
Yeah, I mean, I think slightly different for me. You know, I was in the traditional real estate space for 16 years, and I was very keen to make the transition into the kind of Proptech space. I think we all understand that the residential market and the global residential market is one that is fraught with friction. You know, just in terms of the residential market, it's generally slow. It's generally very expensive. There are lots of conflict and lots of friction in the space. And I was just, you know, with the innovation that was going on in the States and things like that, I wanted to kind of just try get out ahead of the space. Someone mentioned studying. I paid for myself to do a course, and anyway, but enough about me. I think maybe the thought that I'd like to leave is that there's enormous opportunity in this Proptech space. You know, the global property market is absolutely enormous, and I think there are just a hell of a lot of opportunities around for people just to intermediate some aspects of that property journey, whatever that might be. And there are really great opportunities for people, I think. I suppose in some ways I am lucky. You know, obviously we've got a big brother. It comes with its own challenges, obviously, especially being in a kind of listed environment. It's the first time I've ever worked in a listing environment, and the scrutineering is really kind of off the charts. But another thing that I know very well from working in this space, and everyone else who is an entrepreneur, Nigel mentioned it, that you have to look for funds and stuff. I think that's such an important aspect which a lot of people overlook. You have a passion and you setting up a business you're passionate about and you're busy building things, but looking for capital in South Africa is difficult and it's very expensive. People with capital want their pound of flesh and they want enormous returns on their capital and they want enormous blocks of your shares. You know, it's not the same in the States, where the States is just awash with capital and the capital's competing for business. Yeah, our businesses are kind of competing for capital and it's a whole different thing. So maybe a little bit a thought to leave behind is absolutely, you've got to concentrate on your business and get your MVP going and all of that stuff, but practice your sales pitches, looking for capital. And I think Nigel mentioned it as well, is to have a backbone. And sometimes you also do have to walk away from capital that's demanding way too much stuff from you. Yeah.
Awesome, Rupert. Thank you. I think amongst the four of you, that was really interesting and something I was really looking forward to hearing from you on. So yeah, it's fantastic. And I mean, you speak my language. Proptech is, you know, I'm super passionate about it, and opportunities on the continent in terms of entrepreneurship, growing formal sectors and growing sort of equitable access to the property industry at large, which really excites me. And, you know, to see people like you obviously doing what you're doing in different ways at different scales, it's really encouraging. And it's obviously what we're all about at SA Proptech, is just having these conversations. It's pure and simple. That's all we want to do. And we're open to, you know, any feedback, collaboration, just to say that. But with that, we're going to close and let you get back to your Wednesday evenings. Hopefully you clocking off, but perhaps you got a bit of work to finish. So thank you so much to our panelists. I really appreciate you taking the time. It's been wonderful to host you as SA Proptech. Thank you to everyone who's joined us. Again, really appreciate you taking the time in this world of sort of content overload. So thank you so much. Look out for the link, and please get in touch with any comments or questions. So yeah, with that, I bid you good night and look forward to hearing from you. Thanks again, everyone.
Thanks, guys.
Thank you. Cheers.
So cheers, everybody.
Cheers, bye-bye.